Your brain is lying to you about the stock market. Right now, it's whispering a simple story to you, trying to make sense of all the chaos, the noise, the endless stream of reds and greens on the screen. It's a story that feels intuitive, one that makes you nod your head and think, yes, that makes perfect sense. But that feeling, that sense of clarity, that's the bait. The story your brain loves is actually a trap, a cognitive shortcut that feels right but is designed to lead you straight off a financial cliff. It's a trap so powerful and so subtle that it can, and will, wipe out your entire portfolio if you let it. Why do we fall for this? It's because we are all, every single one of us, hardwired to crave simple stories. It's a survival mechanism that has been baked into our DNA for millennia. Our brains didn't evolve to read spreadsheets, they evolved to make snap judgments to survive. This cognitive shortcut has a name, the narrative fallacy. It's our tendency to take a complex series of unrelated facts and weave them into a simple, easy-to-understand story. And nobody understands this human flaw better than Wall Street. They don't sell stocks, they sell stories. Because stories are what move people. Stories are what generate excitement, greed, and fear. Think back. Do you remember the story of the new economy during the dot-com bubble? The narrative was intoxicating. It was a story about how the internet was going to fundamentally rewrite the rules of business. Old metrics like profits and revenue, they were relics. The only thing that mattered was eyeballs, clicks, and growth at any cost. The story was so powerful that companies with no products and no profits, just a .com in their name, were being valued at billions of dollars. It felt like you were investing in the future itself. But when that story shattered, when the world woke up and realized that profits actually do matter, entire portfolios evaporated almost overnight. Or what about a more recent story? One that led to the 2008 financial crisis. The story was deceptively simple. Housing prices only go up. It wasn't just a catchy phrase. It was treated as a fundamental law of the universe, like gravity. This narrative was told by experts on TV, by your friendly local banker, by your neighbor who just flipped a house for a massive profit. It encouraged millions of people to take on staggering amounts of debt, believing the rising value of their home was a sure thing. The story wasn't just a story, it was a license to be reckless. And when that narrative finally broke, it didn't just shatter portfolios, it shattered the entire global economy along with it. These narratives create massive speculative bubbles. The story gets more and more believable the more people repeat it, and the higher the prices go. But they are built on foundations of sand. And when the story shatters, the portfolios built on that story shatter right along with it. So if our brains are wired to fool us and Wall Street is eager to help it along, how do we possibly avoid the trap? How do we invest in a world that is constantly trying to sell us a fiction? It starts with a conscious and deliberate effort to fight your own instincts. First, you must question every single story you hear, especially the ones that sound the most appealing. When you hear a stock tip or a market prediction, you have to become a detective. Ask yourself, who is telling me this story? What do they stand to gain if I believe it? Is this narrative being repeated everywhere, creating a massive echo chamber where dissent is impossible? Is this an investment thesis, or is it just a really good sales pitch? The difference is crucial. A sales pitch is designed to create emotion. An investment thesis is built on a foundation of cold, hard evidence. That evidence isn't found in exciting headlines or viral social media posts. It's found in the boring stuff. The financial statements, the annual reports, the data on market share and competitive advantages. You have to train yourself to ignore the thrilling story on the cover and instead turn to the boring tables of numbers in the appendix. This brings us to the second and most important defense. You must focus relentlessly on the numbers. I'm talking about the actual audited figures that a business is required to report. Specifically, its earnings and its cash flow. A story can promise the world, but the numbers never lie. A great story simply cannot save a business that is bleeding cash. Think about it. Imagine a company with a fantastic, world-changing story about a revolutionary new technology. The media loves them, analysts praise them, and the stock price is soaring. The story is perfect. But then you look at their financial statements, and you see that they are burning through millions of dollars every single month with no clear path to ever making a profit. That amazing story is writing checks that the company's bank account can't cash. Eventually, reality will always reassert itself. The cash will run out and the story will die. Stories make us feel good. They give us a sense of hope and excitement. But fundamentals, the real earnings, the real cash flow, the strong balance sheet, that is what actually makes you rich over the long term. Writing a story can feel like a thrilling roller coaster, but sustainable wealth is built by owning pieces of real, durable businesses that generate more and more cash over time. There's a famous saying that perfectly captures this idea. In the short term, the market is a popularity contest, but in the long term, it is a weighing scale. The popularity contest is the world of stories. It's about hype, emotion, and which narrative is trending this week. It's fast, exciting, and incredibly dangerous. The weighing scale, on the other hand, is the world of fundamentals. Over time, all the hype and all the stories fade away, and the only thing that's left is the actual substance, the weight of the business. The cold, hard facts of its earnings and its cash flow are what ultimately determine its value. Your job as a serious investor is to learn to ignore the noise of the popularity contest and focus only on the weighing scale. Don't let a good story from a charismatic CEO or a popular TV host lead you into a bad investment. A captivating story can be the most expensive thing you will ever buy. It can cost you your savings, your retirement, and your peace of mind. To get better at spotting these narrative traps and building a portfolio that can withstand them, subscribe for our next video. We're going to show you exactly how to read a company's financials to find the truth behind the story. It's time to start weighing the market instead of just listening to its stories. Click that subscribe button, and let's get to work.